Hey everybody, Bob and Phil here for another episode of our podcast. And we're going to talk Tether. You're wondering why I'm opening it today? Is because we want to get the $1 million question out of Phil. We're going to talk about Tether. Is it solvent? Is it insolvent? Is it a Ponzi scheme? And if it blows up, what does that mean for Bitcoin? So stay tuned, wait till the end, and we'll give you our answer.
Trade Junior.
So Phil, you and I have been going back and forth on the Tether thing, and this is kind of maybe the culmination of all the conversations I've had with you around Bitcoin and how's this thing going to end up? Because we're really seeing this, we're seeing a rug pull on a massive scale around everything what I would call the crypto derivative market, the crypto infrastructure market, and basically the 800-pound gorilla here left is Tether. And we were really under trying to understand here because we've been assured a gazillion times that Tether is fine. It has its 100% reserves. It's the reserves are good quality, good collateral. But what struck me, and the reason why I really wanted to talk to you about it, was that I started reading that they're actually lending out their collateral, and I'm like, okay, well, what happens if? You can be fully reserved and you can still have a run on the bank. And really what got my attention on this is that this goes back to the initial, I mean, what goes around comes around. So funny is that crypto is supposed to be better than gold because the gold banks, they lent out their gold. They didn't have the gold. They had to run on gold banks. And guess what now? We're having runs on crypto banks. And again, for my normal disclosure is what's happening in the crypto market is not Bitcoin. Okay, just want everybody to know that so we could dispense with that. But we got a clean house here on these banks. So really what I want to ask you, Phil, is what the heck with Tether here? What's going on? Can you kind of give us a little bit of lay of the land on this?
Yeah, so some people will tell you till they're blue in the face that Tether's fine and it's just a bunch of FUD. But there's been an ongoing question of like, well, show us the money. In other words, like do an audit, like a real audit. And so we'll just walk through kind of what's been thrown up in the air again as of late with Tether. Now, I will say that the mainstream media outlets have been doing a lot of crypto FUD, and this is part of the cycle. They do this almost every bear cycle in crypto because, the institutional players have to play catch up, right? They got to the game late with crypto and Bitcoin. So these guys are often paid or reimbursed to run certain articles of a certain vibe, if you will. Now, that being said, the Tether stuff they're bringing up is a bit of an issue, though, because they're talking about how Tether has been lending more of its own coins to customers. And at $6 billion, these loans represent a broad risk. And so we get into this thing, and it's same like with FTX, where they're pledging their own token, right? So essentially, especially with FTX, they basically like just ICO'd their own token out of thin air, right? And then people treated it like shares in the company. Now, supposedly Tether prints a token whenever you give them, or dollars, they'll give you a Tether token in return as a proxy for those dollars. And then over time, things came out that, well, we don't quite have all of the money associated with the actual token. Some of it's backed up by other things, but it's all equivalent to, it's all worth, the amount in the treasury that we're supposed to have, the backing all of those tethers out in existence. So the question comes, well, if there's a run on Tether, let's just say that, let's say Binance decides to dump all their Tether tokens. They can't redeem. The peg to the dollar is going to break, like that broke with Luna as an example, right? Luna's stable coin broke and that turned into a death spiral. And you'll get a rush to the exits again, and you're going to see Tether depeg. And what will happen is you'll see the price of Bitcoin in USDT shoot up. It's going to shoot way up. You'll see it go, just big break from the actual USD denomination. So BTC USD may trade at, let's say, $16,000. You might see BTC USDT trade up to $20,000, $25,000, $30,000 as that peg continues to unravel. So just to go back through on what's been popping up here, another thing. So we have basically caught wind of these loans that they're doing with the tokens. Then they're saying now that if you notice here on this slide, The reports used to say that none of the loans were to affiliated entities. They've since dropped that language, and now they're not even saying how much that's out there being loaned out. So it leads you to believe that they are loaning out tethers, and that's a risk, especially when there's no audit and you don't know if they're just printing tethers out of thin air. Then they were on CNBC recently, and this gentleman up here, John Reed Stark, his comment was basically, as a former SEC enforcement official of 18 years, the evasion slash deflection slash lack of responsiveness makes me believe Tether is a house of cards. And what he was getting at was that they're like, well, why aren't you providing an audit? And he would say, well, we use attestations. And what that is, that's not really an audit. That's basically a broad-based thing that says, look, they can get a CPA to say, yeah, they flashed me the balances and the balances were there. But that's not an audit. An audit is a full-on, like, you're looking at hard, if there's any loans or losses on loans, you're going to find out in an audit. You're going to find out, how naked they are. An attestation won't do that. So that's a big difference. So that's what they were harping on CNBC. Well, we have these attestations, but in reality, that's not what you want to see. You want to see hard audits. Then you have this slide here. Celsius secures a $10 million equity raise with Tether as a lead investor. But, Tether hasn't claimed any losses on Celsius. So how's that possible? They are actively investing. And we just don't know, are they using money, client funds or treasury funds in this case? We just don't know. So with all that floating around, it really makes you wonder what the heck's going on. So at the end of the day, if Tether were to dump, here's a scenario for you, Bob. Let's say Binance gets worried about all their Tether holdings, right? Because if Tether depegs, the biggest stakeholders are going to be the exchanges, okay? And all of a sudden, if they've got something that's only worth 50 cents on the dollars, that's a huge risk to them. Now, what if CZ from Binance says, you know what, I'm not comfortable with this anymore. I'm going to dump all my tethers because we're going to go to BUSD, because Binance has their own stablecoin, BUSD. And, and he's just going to eliminate the risk, eliminate them being a Ponzi. And what if when he dumps that, much like how they kicked off the FTX crash, right? He dumped FTT tokens. All of a sudden, they had a bunch of collateral margin calls, and the whole thing fell apart. Well, the same could happen here, right? If Binance dumps all their Tether tokens and says, we're not dealing with Tether anymore, they go back and they redeem hundreds of millions of dollars in Tether, and Tether can't keep up with the redemptions, it's going to break the peg to the dollar. And that's where we're going to run into problems. All this stuff runs in, we run into issues whenever we get the collateral shortfalls, and that would create a huge collateral shortfall. What we don't know is the ramifications, like how far and how spread out is Tether exposure in terms of collateral all over the place. Because Tether is deeply, deeply ingrained into the crypto ecosystem. So the first thing that people might do is get out of their Tether. So back in the day, whenever there was Tether FUD, the first thing they would do is get out and go back into Bitcoin. They would just convert into Bitcoin as fast as they could. And so you'd actually see a spike in the price of Bitcoin initially. So we could see that again. Now, obviously, the ecosystem's a little more spread out. There's a lot more altcoins. So we might not see that concentration and spike, but you definitely would see a dumping of Tether. And that's the problem, is that once the fear kicks in, everyone runs to get out of Tether, right? And that puts further pressure on the redemption process and creates a deeper depeg. And so as much as it might seem like you're going to see a crash, you could see actually at the initial onset of this an actual spike up in things like Bitcoin and Ethereum and some of the better alts. Now, later as things unwind, could we see price roll back over? Absolutely, because we don't know who's going to get margin called, who has to just smash the sell button and liquidate everything. There probably will be liquidations, but as far as crashing Bitcoin to zero, that's a little far-fetched. And as you've seen, look at what the ecosystem has absorbed FTX fallout. These are tens of billions of dollars, right, of liquidations. And, here we are still at $15,000, $16,000. So it's unrealistic to think, Bitcoin's going to crash to like $3,000. That's not, it's not how the markets work. But there could be further fallout and, just really flushes out this bear market to the point where you're like, God, is it ever going to end? And that's usually when it ends. So I don't think it's going to be catastrophic for Bitcoin. I think initially it could create a pump, an exit pump, but then it could also roll back over as all of the liquidations get sorted out in the system. So I think that's a really realistic viewpoint of how this is going to unwind. But I do not personally, I don't really trust Tether. If you had a bunch of money sitting in Tether, I'd find either another stable coin or just get back into cash. During the bear market, I think it is risky though, given that there's a lack of audit and just seems like just some shady activity around it. Why run the risk?
Yeah, hey, Phil, can I ask you a couple questions that I was as you were talking, I was absorbing this information. It's absolutely fascinating to me. So, and this is a question totally out of ignorance because I never traded USDC, but can you do a Bitcoin USDC trade and be positioned for a potential double like that to take advantage of a tether break?
I mean, that's just going to be just similar to a BTC USD trade. See, so the BTC USD might not move, right? The tether would spike, but that doesn't help you because it's depegging. So it's just simply, I don't know that there's really a arbitrage play there at all. It's just
Okay,
the real price of it would be US dollars, right? But Tether, if it's depegging, isn't representative of a US dollar anymore. It's a fraction of a dollar. So I don't think there's really a play there other than watching the fireworks.
sure. And then what about exchange like Coinbase? Would they be at risk here during a meltdown of tether?
I think any exchange holding large, vast amounts of Tether could definitely be threatened financially because you're holding, I don't know how much, the amounts that these exchanges hold off the top of my head, but I'm assuming it's hundreds of millions of dollars in Tether. And if that value, especially if that's part of your balance sheet, which is tied to other things like loans, if that stuff's 50 cents on the dollar overnight, that's a significant risk. So if I'm an exchange, if I'm running an exchange, I would be like, I'm not, no, there's no tether. There's no tether on the system. Maybe I'll do USDC or just USD, but no tethers until they can clear the air.
Yeah, and the other thing too is, attestations. That's like, between that and an audit is that, let's say that you needed to plug $1 million hole in your balance sheet, right? Because you did something you shouldn't have done, and you called me up, and I loaned you the $1 million to get past the point where somebody's going to take a look at it and take it back again. The banks do that today. That's what that they call it the window dressing. I
Hmm.
think the crypto people are jealous of that because an audit would tell you whether or not somebody else has a claim on cash they may be putting into the system for a beauty contest. Does that make sense?
Yep.
And the only way we're really going to know whether or not they're truly fully backed is you're going to get stress tested in real life if they don't do a full audit. A full
Right.
audit could stress test the organization by basically giving an opinion on how many days it would take to cover the redemptions. Because Tether tells us they have marketable securities that are reasonably liquid. Well, if it's equities, it could be up to 3 days. Okay. And assuming the equities are static in price, and same with bonds, if they're treasuries, unless they're dealing with like, 7 day rollover treasuries, look at how much treasuries have moved in value, you know? And so I think there's that's a bit of a sleight of hand they're playing here by trying to say I'm attesting to something versus an audit because you can have something in there at that point in time for the attestation, but you don't even know whether or not that's really there, for the business. It was just there for the signature.
Right.
So and yeah, so it's interesting. I really appreciate you doing this, Phil. And I think this needs to flush out too. The only way we're really going to get Bitcoin and some of these better alts that have true value to start moving again is that we have to clear out this dry wood
Right.
that's choking the system right now. So there's no excuses for people to get in this game. And I think you're going to find the American exchanges that are SIPC backed are probably going to be able to handle all these type of lending and things like that because they're going to have backing by some sort of coinsurance that's going to be transparent that people can see.
Right.
So anyway, I really Appreciate it, guys. I know we switched gears here today. I'm going to close this out. Like and subscribe to these videos, guys. Notifications. Check out the stuff when we talk about stocks and things that we've done. We talked Airbnb, hit our target, Phil. Okay,
Yep.
we talked U.S. Steel on the podcast, hit our target.
Yep.
Guys, check out the stuff we talk about. It's working all off our algorithms. I know we throw up the doom memes on the titles, but look, we're gonna help you guys make money in this stuff. We're also gonna get you educated so you're not blindsided. And so I appreciate you listening. Tell your friends and help us grow this channel and really get the word out. So we all win it together. We're all small fry here, so we all can win-win on these trades. So thanks again. Thanks, Phil. Thanks for your time and your expertise on this.
No problem. See you guys later.
Trade Genius.